So we say, unto God be glory, honor and adoration. Almighty God and Father, we thank you for the little we are about to start. We pray that the little be more than enough.
Amen.
Inshallah, you crown all our
Amen.
efforts with success.
Amen.
Okay.
Amen.
I'm also happy for those of you that have gone back to school. I'm very happy that you all go back to school safely. And I'm praying to God Almighty, in His infinite mercy, to be with you all. So I pray that God will be with you all in everything that you do. And please, I would
Amen.
like to beg you that you are in school, what you need to do is to pay attention to all what you are being taught in the school, so that I won't go back to your respective school. You can now get the beauty of graduating at the appropriate time. Please, school is not where you go to and start showing skill to a lecturer. Don't disobey. Just be at the right point and say the right thing. If you don't understand, ask your lecturer. Okay, today we'll be looking at branch account. From where we are going to start from, this branch account is the one that I'm going to do in line with your ATS 2 syllabus. So what do we call branch account? What is branch account all about? I'm going to explain that in details and we'll go back to our board. Now, when we talk about branch account, now for your information on your WhatsApp group, you're going to see that I sent 2 messages. And I also made some of you co-hosts so that you'll be muting those that are making noise. Like for example, I think I made Dollar to co-host. Don't know, maybe I have. Gabriel, Vanilla. So I want you to please, if anybody is making noise, mute them all. Thank you very much. So can we move on? So what we are going
Yes.
to be looking at is the group account. Is the branch account. Pardon me, I just finished group account with your senior ones. So let's go to do that. Please, if you see anybody popping up, Abibat, Gabriel, I want you to admit them. I don't want anybody standing outside the class. I don't think I have anybody. Everybody is already with me in this place. So we start. Now we'll be looking at branch account. Now from all what I want us to get to know, when we talk about branch account, we're actually looking at a business. With a business that is within a business. Now note very well, branch account is not the same thing as joint venture. It's not the same thing as what we call departmental account. In a department, you are having whereby big store, like the one like we have in ShopRite. Sorry, actually Ikeja's mall. In where you have it that Ikeja mall, you have the department where they sell clothes, where they sell the following item. That's a departmental store. And so like ShopRite, you have where they sell electronics, where they sell clothes, where they sell some other things. But when you talk about branch account is something that is coming from a business that is organized as a branch activity. And in that branch, it is a subject of another company, which is the head. So when you talk about branch account, simple word, let's not start beating around the bush. We are talking about an entity as saying a branch is a part or unit of business organization not located within the same premises. So, for example, let's look at the financial institution. We have First Bank. Where is the head office of the First Bank?
Lagos.
Lagos, thank you. Where precisely in Lagos?
Victoria Island.
Where
Victoria Island.
precisely in Victoria Island?
One
One
place like
place
that.
like this.
One place like this, you can see there's always a student. That is where you have, you hear that they'll tell you is at Marina, but it's actually on Broad Street. So that is where you have the First Bank headquarters. Now, we have the headquarters on the island, Lagos Island, which is the Broad Street. Now, we have a branch here, also in Lagos. That is a local branch. But we also have a branch in Sokoto. That is also a local branch because they are located within the same geographical location in which they use same currency as that of the head office. Now, we also have branch of First Bank located at Benin Republic. That is not a local branch. That is a foreign branch. So when you are talking about foreign branch, we are looking at a branch that is outside the geographical location and they don't use different and they use different currency. So please, when you are talking about branch, I want you to be very careful. You might be asking your exam, a branch that is located within the same geographical location of the head office. Are you there now? And use same currency is called dash. Local branch
Local
or foreign
branch.
branch?
Local branch.
Thank
Local
you.
branch.
Now, the geographical location does not mean it's a branch that is 1 million far or something. It is a branch that they don't use same currency. Head office of First Bank is in Lagos. We have a branch at Kuton, which is Benin. Is it foreign or local?
Foreign.
Foreign.
You have head office of First Bank in Lagos, and you have another branch in United Kingdom, let's say precisely in London. Is that foreign or local?
Foreign.
So you see that.
Foreign.
Thank you. So that's why I do tell some people, if you say you want to travel abroad, you don't need to go to UK. Even if you go to Benin Republic, you have traveled abroad. Even if you go to Niger, you have traveled abroad. So if I want to have, like now, we want Riskfree to have a foreign branch, we just locate one at Benin Republic and we'll tell you we are an international company. Are we not? We are. So that is it. Some people will go to Benin Republic. If they say, if those that have studied abroad, the people in Benin Republic and the people in Zambia and the people in Togo, they studied abroad. While you have studied in Nigeria, you study in Nigeria. Okay, let's go to classes of branch. There are 3 classes of branch. Now, these classes of branch is based on their decision. Are we there now? Or the decisions or level of power that they can control. We have the 3 classes of branch to include 1, independent branch, or we call it autonomous branch. We have semi-autonomous branch, and we have what we call dependent branch. Dependent. Some people will say dependent. I remember those days I call it dependent. It's called dependent branch. Now, you see, from these classes, the classification is based on their power. When you look at what we call independent branch, this is a branch that is allowed to incur expenses on purchases of raw material and everything. And this bank maintain their own set of accounts. So they make their own decision. They don't wait for the head office. However, note, they cannot do anything outside the policy of the head office. Now, semi-autonomous are those branches that have some powers to make managerial decisions, but those decisions are minor decisions. Because if they need to make some decisions on recruitment, they will wait for the head office. But when you're talking about independent branch, they recruit whoever they want, but they make sure they do it in line with what the head office have said. Then we have dependent branch. Dependent branch are the branch that they don't make any decision at all. They rely solely on the decision of the head office. And that is what we have there. Now, what are the status of branches? I've talked about dependents. I told you they can also be called status. Independent branch, semi-dependent branches, dependent branches. Now, why are all these branches set up? The branches are set up in order for goods to be transferred. So once I get to this point, we are going to board. We said that the head office did not just set up the branch in order for the branch to just be enjoying themselves, or like what we call the NSAS, whereby there is no leader. When it comes to this one, there are leaders, and the head office is the leader. So let's quickly see the fundamentals of all these principles, and then we learn it as we move ahead. We have talked about branches in their fundamental way, and I've looked at them in terms of what I want you to get to see in the branches as we have. And don't forget where we started from. We look at branch as saying that you have an organization which is the head office, maybe located somewhere, like you can have it located in Lagos, as the one we have looked at First Bank. And then you now have branches outside the location. Those branches could be what we call a local branch and what we call a foreign branch. What makes them local is that the ones that are within the head office geographical location. And you can see they use same currency of presentation with the head office. While the foreign branch, we are saying that located outside the head office location. So we have looked at others. Now, what we are also saying is that their status also depends on the decisions that they make. We have some of them to be independent, we have them to be semi-independent, and we have them to be what we call dependent. And that is based on their decision. Now, of more fundamentals I want us to also see is that when we talk about these branches, we are looking at how we can classify them, because that classification we have done. But why the branches are set up is for them to sell goods on behalf of the head office. So they are now what we call transfer method. What are the methods in which goods can be transferred? So one, goods can be transferred at cost price. That means whatever price the head office has bought it, you will transfer it to the branch. Then it can also be transferred at what we call cost plus the price, which you can also refer to as what we call cost plus markup. Then the third means is what we call the selling price. Now, in case you are asked, and I'm not there, you are asked, what are the methods in which goods can be transferred from the head office to the branch? There are three methods. What are those three methods, class? Team one.
Cost
Cost
price
price.
cost plus price
plus price, that is cost plus markup and
markup
price.
selling price.
Selling price. Okay, we are going to take it this way. The first one we'll be looking at is that we'll be looking at what we call a dependent branch, in which goods is transferred to the branch at cost price. Remember, we said when we are talking about dependent branch, a dependent branch has the following characteristics. All records are maintained by the head office. So who maintains all the record for the branch?
Yeah, the
Head office. So it means that everything that is doing is done by the head office. However, note, there are sometimes that the head office might allow the branch to maintain Are you there? Certain cash flows, certain cash flow. And in that case, you'll be seeing us prepare what we call the branch cash book. But if not, all the money in terms of cash transaction, we want to make payment, everything is always done by the parent. Sorry, it's always done by the head office, and the head office will be the one that maintains all the records. So let's now look at what are the books to be maintained under dependent branch in which goods is transferred at cash at cost price. So let's look at the books of accounts. What are the books of accounts to be maintained? Book of accounts, also books of accounts. So the first book of account that we have to say, I don't want us to cram. For the branch to be able to sell goods, what would the head office have to do? In
They
order
will
for
send
that
goods
branch
to
to,
them.
you have to send it to them. Thank you very much.
Yes.
That's why the first account that must be prepared is what we refer to as what called goods sent to branch. So you can see that all what we are doing is logical. So after the goods have been sent, when it gets to the hands of the branch, the head office will look at it because as the head office is sending, he will be monitoring the goods. And when goods is being sent and being monitored, in accounting we refer to it as inventory. Yes or no?
Yes, sir.
But the person that the inventory is with is called what?
The branch.
So that's why the next ledger that we need to prepare is called the branch inventory account. Now, the head office have sent the goods to the branch. The branch will have to start selling. When the branch starts selling, it will make money. And when the money is sent to the head office, will the head office keep the money in his pocket, or where will he keep the money?
Bank.
So we
Bank.
now have our bank account. In this case, we talk about head office bank / cash account. But there are some situations that the head office might allow the branch to also maintain some of these cash flow, that okay, keep some of the money for your immediate use, and then you have that. So you can also have a for branch cash account. Now let's see the next event. People will start coming to buy from the branch, and there are some people that will buy from the branch and they will not pay money. Those guys, what do we call them? People that will come and buy from the head office and they will not pay. Sorry, from the branch and they will not pay.
Debtors.
They will be
Debtors.
paid. We
Debtor.
call them debtors, but here now we refer to them as what we call receivables. And who are the people that they are owing? We call them branch or class receivables. Are you there now? Now there are instances that things will happen in the organization and the branch will need to incur expenses. Those expenses we have to also be maintained, and we refer to them as what branch expenses. Any question? Okay, if there's no question, let's move ahead. Now, having considered all these fundamentals, I will get to a point that you guys will still see something. Something can happen, and many things can happen. For example, look at what happened during this COVID. During the SARS, and some people have to go and start looting. You can have some situation that you have looting, and the branch you have to record it. In that case, we will be looking at what we call goods stolen. Goods shaking your goods stolen account at the branch. If the goods are not stolen, you can have some of the staff that you have that they need to help themselves. There are some people now that they know when they were looting, they now came and do what we call cash And please, the full meaning of this word is the cash sales stolen. That means the cash sales that have been made that have been stolen. Now you can see these are all the possible accounts that we record under which method? Under what we call dependent branch
Dependent branch.
and goods sent at what class?
Cost price.
So that is that. Now I'm going to show you the format and how this translates. But the full format in terms of my handwriting, I have sent it to you. So if some of you want to read more in depth, you're going to see it in what I've sent to you. This I have sent to you so that it will make my job very easy. But I'm going to, if you look at it, this is my handwriting. I've told you about cost plus. Pardon me, I will try my handwriting, you can see. So you can see it's like a doctor own, and I know by His grace in few months of it, my PhD will be completed by in Jesus' name. So we have that. So you see how I got to all these points. You are going to see them, and I will explain to you in details. So and you will see that I don't want you to cram. So you see the beauty of it. I can see how beautiful my handwriting is. Yes or no? So I haven't seen my beautiful handwriting. Let's now go to my handwriting that you're already used to. On the now, some of you will see now that I have changed my background to a feather, and I'm doing that because some of you said you don't want people to see my beautiful children. Okay, let's go to the format, and I'll give you all the scenarios. Now, if you are asked to prepare accounts and you are getting to see this, how do I know that the branch is a dependent branch? When you are reading the question, and I'm going to give you a sample. Once you start reading the question, and from the question you start seeing scenarios like all the transactions in the book of the head office are telling us that is there. I hope I've not deleted it. Where's my branch account? Okay, this is no, this is for your senior class. Just give me some minutes. I think I have deleted it. Let me quickly look for it. I'll be with you soon. I opened it now. Oh, I'm having no. Oyinbo. Okay. I've seen what I'm looking for. Okay. So this is it. Now, if we go down, let's look at the question. How will I be able to know that this question has to do with that? Let's see this. We are told May and Baker Limited supply goods Mimi to his our branch. At what class?
At cost.
You can see that. That is telling
At
me
cost.
that is at cost. Okay. I haven't looked at that. We are not told that all cash received are remitted to the head office on daily basis, and the head office prepares the account on behalf of who?
On behalf of the branch.
Immediately you read something like that, it tells you that that branch is a dependent branch. And what is the method in which goods are being sent?
At cost.
So that is that. Okay, that be the case.
At cost.
and cost. So let's quickly look at the format I'm going to give to you. Then we'll solve this question. Now, let's see. I don't want you to cram in my own way. I always tell my students that you must be able to know all the fundamentals in everything that we do. So if you are given the question, you identify the branch, you identify the head office. So what is the account that you need to prepare? I always do it this way to tell my students the accounting format is there. What's the first thing that you have to see is that the goods will be sent to branch. So when goods is sent to branch, there are two things that will happen. You open the goods sent to branch account. I don't want you to cram it. Then you now open what we call the branch. Why am I even before? I don't want you to ask. Once the goods is sent to the branch, now let me ask. The goods sent to the branch is showing that the head office is expecting an income. And when you talk about an income in ledger, will it be on the debit item or a credit item?
Credit.
Credit.
Why?
Credit item.
That's why you credit your goods account.
Credit.
Thank you. Now, I will credit your goods sent. That goods will be going into where? It will be going into the inventory of the branch. So that is why you are not going to have the corresponding entry to be in the branch. I will debit the branch. So with this, it means that my branch inventory will be debited. Now the question is, what will be the value? It will be at cost price. So if I'm to record this, I'll say credit the goods sent to branch account with the corresponding entry in the branch inventory account. With the corresponding entry in the branch inventory account. Then I go to my branch inventory account and debit. Look at what I want to do. I just want to show you something. I'm coming down here. So that will be goods sent. Are you there now? Account. That is it. What I have on the board is a branch account that is fresh. But note very well your own exam, there's going to be an opening inventory. So if there's an open inventory, you would have opened the inventory already. Balance brought forward. So that represents the branch at the beginning. So do you get the first step? The second thing that will happen is this. The goods have been sent to branch. You might have the branch returning the goods. Branch return, goods return to head office by branch. All these things I'm writing here, you can see it in your note, but I'm just showing you how it comes. If goods is returned by the branch in the head office, what do you think will happen? It means whatever you have in the store, what is that going to show to you? What you have in the store, will it go down or it will go up? Will it increase or it will
Go down.
It will reduce. So
Decrease.
if
Yes.
your inventory, which is an asset, is reducing, do you debit or you credit?
You credit.
So that's why you come here and say credit branch inventory. Are you there now, account? And you are going to debit your goods sent. And please note, it is at cost. So you have it here, goods. What I always tell my students so that you don't forget, you just say return to head office. And that will be inside your goods sent. So it will come here. I will have return by branch. You can see you don't need to cram. You can see how the fundamentals are rolling out. I always tell you guys that account is the most interesting thing to do. It's very simple. Then number 3, what are the possible situations that can happen in number 3? Now we've had a situation whereby goods have been sent and that. So the inventories now will not be something that we have to sell. So thing 1, you can have what we call cash sales. Once you sell, it means what you are selling will be reducing what is in the inventory. So let's talk about cash sales made. So when cash sales is made, what happens? It means what is in your cash account, head office cash to bank account will increase. Then your inventory, branch inventory will what? Will reduce. You get what we are doing? So in that case, I need a cash book.
Yeah, because I want speak they want 31 now. The 30 there. They don't stay
Cash
there.
book for bank. Please, who is that? Reduce your volume.
They cannot mind.
So we have and be very careful. This one can also have his own balance brought forward. So we now record the sales, cash sales. Did you get that transaction?
Mr. Imam.
Yes, please.
So how is it having balance brought forward?
Thank you. Because you can have some situation whereby the head office would have been having a cash balance before. You know, this one we are saying we are just starting. But you can have your question whereby the head office has been operating before. And if it has been
Okay.
operating before, that means there must be a balance brought forward in his cash book before the further cash sales. Gabriel, any
Okay.
question?
Yes, sir. The goods that we sold,
Yes.
is it going to be, what of if the value increase? Are we not going to show that there is increase in value, or we just record it like that?
Thank you. You see, this sales that you are seeing here is recorded at the selling price. Because what you're going to see is that maybe the head office sent to the branch, of course, 10 naira. The branch is not going to sell it at 10 naira. So the cash sales will be recorded. We are going somewhere. You are going to see at the end of the day, we must be able to determine the profit made by the branch. If you look at all the values I've been writing in XXS, they are all at cost. So they are all at cost. You can see this one is now at the what? Selling price. So this one too might have had its own value, maybe whatever you have it before. So where I'm going to now is now what's the next item? The goods have been sold for cash. You can also have some situation whereby goods can be sold on credit sales. Do you agree? Do you want me to still be writing the double entry? Don't forget, these goods made that we are looking at is at selling price. So you can also have credit sales. That is number 4. So when we now have credit sales, we've all known that already, that credit sales will reduce the what? Branch inventory account. Will reduce the branch inventory account. Now, question I would like to ask, where will you record credit sales? Where are we going to record credit sales?
Branch receivables.
God bless you.
Branch
I can see you
receivable.
guys are really getting it. So we'll now go to branch receivables. So I open what we call branch receivables account. Then we have the value here, which is credit sales. And don't forget, because this is also an account that can be existing before, you can equally have its own balance brought forward. So long. Any question? So if there is none, fifth event can happen. You can have some of the people that you have sold to, your customers, get to return the goods. So in this case, you can have what we call return by customer. Now I want you to pay attention to the return by customer. There are two ways. You can have return by customers to branch. A customer that you have sold to at a selling price, are you getting me? And he has not paid money, now decide to return the goods. You can have this on what we call return to branch. So you will be giving him back his money at the selling price. So you just go to your inventory and say return by customer, selling price. Now no wahala. So what's the double entry class? I debit my what? Branch
Receivable. Branch, you credit receivable.
inventory and credit my branch what? Receivable.
Mr. Emma, is it for credit? Is it for goods returned that was sold on credit?
Bẹ́ẹ̀ni ma.
Okay.
Are you there now? And in this case, what we generally assume is that we are believing there is a customer that we have sold to on credit that have not paid, that is returning goods. Are you there now? So that is all we are receivables.
Yeah, what are we debiting? Branch what?
We are debiting the branch inventory.
Okay.
So that is the first one. Then we can have the second one. You know, there are some of you, even like what's happened in Riskfree. Some of you, maybe the registrar will have given you information. Instead of you to attend to that information, just tell the registrar, don't worry, I'll go and meet the MD. Or some people that you have sold to, you will get to see in some organization. You are the customer that have sold to the customer at the branch in Sokoto. The guy will now say, don't worry, because I don't like this goods. Instead of him returning the goods to you in the branch, he now said, I know your boss at the head office, but there's going to be an issue. You will talk about what we call return to head office. Now be very careful. When the customer was to send the goods to you, he sold it at a selling price, yes or no? Yes?
Yes, sir.
So you talk about branch inventory. Branch receivable. And that will be at selling price. But this is not where we are going. When the goods get to the head office did not send the goods to the branch at selling price. He sent the goods to the branch, are you there now, at cost price. So when you are coming to write, you write the cost. There's an issue. The customer will now ask the head office, this thing I bought was not 10 naira, it was 15 naira. The difference of 5 naira, which was the profit loading, who added that profit loading?
The branch
So
office.
what the guy would just do, he would say, Mr. Man, my customer,
Branch.
I, as the head office, good sense, I will only take cost of it. If you want your profit, my beautiful customer, kindly approach the branch, and the branch will be accounting for that under what we call branch inventory, and that's where you have the profit. Did you get what I've just explained?
Yes, sir.
Oh, that
No, sir. No, I don't get, sir.
I will
No,
repeat
sir.
again. Let's start. We are talking about two returns. We have seen the first return here, where we are seeing the fundamentals. That here we are looking at the situation where goods were returned by customer to branch. Selling price is selling price. But when the goods were returned to the head office will have to underline the fact that the goods returned will reduce the amount expected from the receivable by the selling price. But when that gets to the head office, because you are using the cost method, and everything in this cost price, in this goods sale is at cost price. Are we together? Is at what class? It's at cost price. So in that
Cost
case,
price.
the head office will only consider the cost. It will only consider the cost, which is this amount you are seeing here, cost. Then the question will now be, where will the profit be? The profit will be adjusted for in the branch inventory, because it was the branch that added the profit. So that's how you're going to see here. When we get there, I want you to look at it. And in my lemon color, you see what we call return by customer to head office. And what we are only going to record there will be the profit element. And how do you get the profit element? That is the selling price minus the cost.
Cost.
Are you getting that? What I just explained to you now is one potential question under your short answer. You'll be told, goods sent to branch goods sent to branch at cost from the head office was sold to a customer for 100 naira with a profit margin of 20%. Meaning that the branch have added 20% margin. So 20% of 100 is what?
220.
20.
20.
So if you are not asked, what is the double entry if the goods is returned? So if that be the case, you are going to debit the goods sent with 18 naira and debit also
Credit.
and debit also the branch inventory with the total amount of 18. But you will not credit the branch receivable account with 100 naira. Do we get that now? Okay, so I haven't gotten all these fundamentals. Some other things can also happen. You can have a situation whereby the goods that is in the warehouse can be stolen. And in that case, you talk about what called goods stolen. Like the one you saw, those guys that have done the hoodlums that have decided to go into the store of some organization to steal. When you have that and the goods is stolen, it means you open an account. I'm going to give you two scenarios. So we have what we call goods stolen. But for example purpose, you might have them written out separately. Goods stolen account. And that goods stolen account, you have it here. When goods is stolen, please adjust it for this. So I said goods number 6. Goods stolen. So my goods that have been stolen, debit and credit. It will reduce what is in the branch inventory, because what in the store will go down. Then you now credit what we call goods stolen account. So we have what we call branch inventory. So that is that. Apart from goods stolen, you can also have what we call cash sales stolen. Now I'm going to explain this in detail because we must be very careful. The cash sales stolen I will explain. Now, let me give you this scenario. Gabriel has a store and employed Ojukokoro. Mr. Ojukokoro is somebody that Gabriel has paid very well and is still paying very well. Now, Mr. Ojukokoro resumed on Monday morning, sold a particular goods for 10,000 naira. Instead of keeping the money in the vault, he kept the money in his pockets. Now, let me ask a question. Has sales been made in that organization?
Yes, sir.
Yes,
Yes, sir.
Or was the money kept in the vault?
No.
No, sir.
no.
That is what called cash sales stolen. Now, scenario 2. Ojukokoro at night, before going home, haven't done what he has done in the morning. He just look at Mr. Gabriel's vault and just decide to pick money. In that one, we call it cash sales. Sorry, are you there? Cash stolen. Are you getting that now? That
Yes,
one
sir.
will reduce your cash book. Why cash sales stolen will reduce your inventory. Are you getting what I'm saying?
Yes,
Yes, sir.
Are you getting that now? So, but the one we are used to in your question for branch should always be cash sales stolen. The examiner will always write it as cash sales stolen. Please, cash sales stolen. In case the examiner say cash stolen in ICANN exam, are you there now? It means that the money has been stolen from the vault. Okay, so if that says stolen is what we are looking at, number 7. At the cash sales stolen, the cash sales stolen. It means that your branch, because it's like the inventory that has been stolen, your branch inventory account will be what? Will be credited,
reduce.
will reduce by crediting, and then your cash sales stolen account will be what? Debited. So I come here, branch inventory, which is the amount. Then I now go to my work class, branch inventory, and I have what we call cash sales stolen. Any other exam? Any other question? Now, if there's no other question
Mr.
from other, yes, please.
I have a question.
Yes, question.
Under the entry for goods sent to branch account, is it always a credit entry?
Bẹ́ẹ̀ni ma, because
So when
branch,
we debit,
when you credit branch sent to a good sent to branch, you know you are trying to say that this is the amount I'm expecting as an income,
yes.
or a kind of saying that the branch is owing you, which is a form of liability. And either income or inventory, sorry, either income or liability, we have a credit balance.
Okay, so that means when we debit it, we are like reducing it.
Yes, ma'am.
So
You can see.
when the debtor that returned goods when returned it to the head office instead of the branch account, the branch office, where did we debit?
I said
Okay,
it
is it
now
because we
because
want to reduce?
when the goods is returned to the head office, that whatever the head office is expecting or what he has think he has sold to the branch has reduced. Because what the customer is also sending back is part of what he's thinking we account for his money from the branch.
Okay. Oh,
Okay, let's
okay, I
go
understand.
on. Now look at this. You can also have some other things that can happen in the inventory. You can also have what we call normal loss. Normal loss is that if you have, or you can call it wastage. Like maybe you are into all these kind of organizations. If you look at them, organizations that are into petrols and all the rest, there are some things that even if you don't sell them, they will start what? Getting to waste. Are you there now? they will evaporate. Now, before we close on the chatting, from this branch receivable, you might have them start paying. So you can have what called cash paid or check paid. So when they start paying, what happens?
Debit
The
cash
money
account,
in the
bank
you
account.
have to, and then you debit cash account. You can see that you guys are really beauty people. So I'll now bring it here. I'll now write branch receivable. That is how to do with the payment. I get that. If there is no payment, you can also have what called bill receivable. Bill receivable is to reduce the debt of what you're having. Now, the one that is pabambari is a man that will tell you, Oga, we are not going to pay you. Victor, sorry, let me explain when I say pabambari. The one that is more surprised is whereby the examiner will tell you, the debtor, which is disabled, will tell you, I will pay when Nigerian government answers. So usually that would be a word, a bad debt. The word bad debt is also called irrecoverable debt. Are we there now? And once you have an irrecoverable debt, that means you are going to have a bad. So you have his own ledger, bad debt. I'll call it irrecoverable shaking. You have what we call irrecoverable debt. So I debit that too, which is from branch of cloud receivable account. I haven't done that. You can also have some customers that will tell you, please sir, I'm a good person. You can also extend to them discount allowed. Are you there now? So you also have that. So which means that will go to our discount allowed. I think you guys can cope with the double entry. So I don't need to be writing it again because you see it in the other material that I will send to you. And for those of you listening on YouTube, if you need the material, you can chat me up. Just send a comment. You have to pay. And then you are Riskfree student. And you can get Riskfree on the internet. We can do better than this. We are the first in ICANN tuition houses. Okay, let's see class. So we now have these as well branch receivables. So that is done. And we have that. Now all these informations have been inserted. So let's start closing the
This time,
account.
man.
Yes.
What of if the branch account, if they spend, they incur expenses? Or are they not going to incur expenses? Okay.
We are going there. There are sometimes that the branch can incur expenses. If the branch incur expenses, like what we have been told, everything will be paid by the head office, except the branch is allowed to open his cash. And you will know when we get to that in question. If there's a branch, let's say for example now, the branch is allowed to open his own account, which we call branch cash to bank. It would have recorded maybe as a balance brought forward, whatever, maybe you paid for any expenses without telling the head office that's what you have. As we move ahead, we've gotten all this so we can wrap up all our accounts. Close very well. The amount in the branch head office, when we are closing it, the balance in that account will be transferred to what we call purchases. So that's what we call the balancing figure. to go into the purchases because the head office will still prepare its own account. So that is thing one.
Mr. Emma,
Thing
please come
two,
again.
I said goods sent to branch. When we are closing it, we are not going to have any balance carried down. The balancing figure will be described as purchases because that is what the head office will now take to its own record. And when we are through, you are going to see, I'm going to now prepare what we call the final account of head office. Because after the head office have finished preparing all the record of the branch, you will now transfer some of the information to his own record. So are you getting that? So under
Yes,
this
sir.
cost method, terminal must provide you with what we call the closing balance of the branch. So they will give you this. It will be given to you in the exam. And at the end of the day, where are we now going to? Is that we will have a balancing figure here. And that balancing figure here will be regarded as our gross profit. Hello, class. In
Hello,
the
sir.
branch inventory account, using cost method, the examiner will provide you with the closing balance of the inventory. Now, having inserted that, there will be a balancing figure on the debit side. That balancing figure will be your gross profit. It will be your work. But if the balancing figure, please, class, is on the credit side here, you are having it as balancing figure here, that will be your gross loss. Do we get that, class?
Yes, sir.
Any question? No. So we have closed that.
So I have a
Yes,
question.
please.
All these entries, are they
Question.
for dependent branch? Sir,
When I started, look at it. I said that these are dependent branch groups of what account? Dependent branch, goods sent at cost price. Do you understand that?
yes, sir.
So that is what we have been doing.
So we still have entries for semi-dependent branch and independent branch.
If don't forget, this is dependent branch at cost price. We are still going to do dependent branch at cost plus. Then we'll now do dependent branch
and at selling price too. Selling price. Okay.
Are you with me?
Yes, sir.
Are you with me, class? So don't get scared there. So by the time you guys are really in it now, you get to see that it's very simple. So that is that. Okay. Now we'll also wrap up all this. We also have our discounts allowed. So in this case, I can't close what I have in the head office yet. Because in this head office, if there's a branch cash account, whatever the branch has, I will transfer it to the head office. Because the head office owns all the money. So the guy does not have any money. I said they asked him to maintain a float. So I'll bring it, I'll say branch cash or bank. So I close all that. Then I now work up balance carry down, which the head office will still maintain. Then at the end of the day here, Note very well, they can also be what we call cash refund. Maybe there's anything, they can also be what we call dishonored check. Are we there now? So at the end of that, it should be in the book of the receivables. And those ones, no wahala. You don't have any issues with them. Now, the goods stolen will be transferred to the statement of P&L. The car stolen will be transferred to the statement of P&L. Bad debt written off will be transferred to the statement of P&L. That means written up to statement of P&L. Discounts will be written up to statement of P&L. Branch expenses will be written up to the statement of P&L. And having done all that, so we can now prepare what we call the branch P&L. So what is the branch? Statement of profit or loss. So we derive what we have earlier. We said we have gotten our gross profit. Class, where do we determine our gross profit? It can be gross profit or loss.
Determine that as the branch.
From where?
At the branch inventory account.
So
Branch
we now have
inventory
all
account.
the operating expenses. So what are all the operating expenses that we have? See, one, we have the discounts allowed. We have the branch expenses. What else can we talk about? Goods shaking you. Goods stolen.
Cash
We also
stolen.
talk about cash what? Cash shaking. Cash says what, class? Stolen. So we can also have discount allowed. We also have our bad debt, which is called recoverable debt. So all these will be subtracted in order for us to get our net profit. So the head office will prepare all these records in order to update his own record. So the head office will also have his own record. Now, please, what we are looking at here now is now the book of the head office. Book of head office. So he will prepare his own statement of profit or loss. And the statement of profit or loss of the head office will start from his own sales, which you will record. Then we now have cost of sales. In his own cost of sales, don't forget, we're going to have what we call opening inventory. Then he will have his own purchases. Now, this is now where I want you to pay attention. From the purchases of the head office, we are going to reduce goods sent. Remember the last time I told you that anything will determine as the value in the goods sent. Where do we take it to?
Purchases account.
So that's why we are going to say that we are going to reduce it from the. So what we are trying to do here is that we are telling you that the purchases in the book of the head office has reduced because the head office have sent some of them to the branch. So from there, I will now have what we call my closing inventory. So reduce closing inventory, and you have what we call the gross profit. Please don't forget that what we are doing here is the book of who class?
The head office.
And the head office will have his own maybe discounts received. He can also have his own commission received, or whatever that he wants to receive.
Miss Emma.
Yes, please.
All these details will be given in the question sheet.
Bẹ́ẹ̀ni, gbogbo ẹ̀ ló fún yín. But let me
Okay.
tell you, the examiner will tell you questions to prepare that of the branch and do the head office. But in case they do, I'm teaching you. So you have the operating expenses. All what I'm writing will be given to you in it's the normal way we do our final account. So he has his own expenses, maybe telephone. I'm going somewhere, that's how I'm going. And other expenses, there are many. So we'll now subtract. At the end of the day, you will now have a profit. Your own profit is not completed with you adding the net profit of branch. So the net profit of the branch that you determine here, the net profit of this branch, which is NN, you will now add it to his own net profit. So he will now give us what we call the total net profit of the head office. So that is that. And that is branch account, dependent branch, goods sent at cost price. So can we consider a question? So let's look at one of the questions in our risk-free pack. And the question in risk-free pack, I think I've also sent it to you.
May and Baker.
May and Baker. So let somebody read May and Baker for me.
May and Baker Limited supplies goods Mimi to its Owo branch at cost. All cash received is remitted to the head office in Lagos daily, and all expenses are paid by the head office on behalf of the branch. From the following particulars, write up the accounts in the books profit and loss account for the year ended 31st December 2006. All figures are assumed correct.
All those figures are assumed correct are what we need. Now, look at this. We don't need to move on. If you look at this, you can see that the goods was sent at cost and all the rest. And the examiner didn't tell us the ledger that he wants us to prepare, but you must get to know all those ledgers that we need to prepare. So I assume you all have the information with you. So in that case, let's move straight. So in preparing my account, what is the first ledger that I will need? What is the name of the company first?
May and Baker.
So we have May and Baker. So
Limited.
what's the first? Limited. So what's the first ledger required? Please, for exam purpose, the examiner must state the ledger that he wants you to prepare. It must be stated. If not stated, your question is not complete. Okay. Once I finish this question, I'm going to show you all the diet that the question have been asked. And there are two particular diets that my attention has been drawn to. I want you to study September 2011. That's a very good diet that might be repeated. So please, I've said it, September 2011. I'll write it down. But let's look at the good sense.
Yeah, we don't have access to that.
You don't have access to it.
Yes, sir.
You don't have access to September 2011.
Yes, sir.
Okay, I'll just remind me. I'll see if I can send it to you.
Okay, sir.
And your 10 diet, okay, your 10 diet cannot cover it. So let's look at what we call goods sent to branch account. So that's the first ledger we are preparing. So what's the second ledger we are preparing?
Branch inventory account.
And see that you guys now know it. And I don't want them to be on the same page so that I can enjoy what I'm writing. Gabriel will say opportunity for the writing to reduce. Don't let me be an Ijebu man. So can we start? What's the first information that we have in the question?
Goods sent to branch at cost 100,000 naira.
Goods sent to branch. Now let me tell you, even if I don't know anything to do, there are three main ledgers that are very important, and I'll have them have balance brought forward. That is goods sent. That one does not have balance brought forward, but branch inventory account has balance brought forward.
Cash also. Receivable cash.
Account. And my branch receivable account will have a balance brought forward. Yes. So I'm exercise patient on that cash. So let's go. What's the first transaction that was provided?
Goods sent to.
So what's the accounting entry?
With the credit, goods sent to branch account, and debit branch inventory account.
What's the amount?
100K.
100,000.
And what will I have here? Branch inventory. So I go to my branch inventory. I will call goods sent account. How much is that? 100,000. Next.
Goods to return to head office.
What's the next transaction?
Goods return to head office.
Goods return to
head office.
So in this case, so this is returned to head office by the branch. How much?
5,000.
Yeah, 5,000. Next.
Cash sales.
Cash sales. So I have my cash sales. How much?
80,000.
In this case, quickly go through the question. Can you see anything called branch cash? Branch cash.
No.
Is there anything called branch cash? You sure?
No. Okay, closing cash float.
I have to confirm. There is an opening cash float. So once there's a cash float, then it means that the way I'm going to present my solution will differ. So in that case, I'm going to have what we call what's the next item? After cash sales class?
Expensive.
You said what?
Credit sales.
Mr. Emma.
Yes, please.
Did you change the inventory accounts to inventory float?
Listening, Gabriel. No.
I didn't get what you said when you said you want to.
Sales is 1,000. I haven't done that as a branch because there's an opening cash float. There's an opening cash float for the branch. So that's why instead of taking the money to the head office straight, I'm putting it inside cash account first.
Mhm.
So after that, I have credit sales. What do I have next?
So what's cash float?
Cash float is a float that is given to the branch. You know, like your petty cash, that the branch will still be operating that before.
Okay. Yes, sir.
Okay, next question.
Expenses paid by head office.
Expenses paid by who?
Head office.
So let's see the expenses paid by the head office. So it's the head office that is paying it. And we don't have a cash for the head office. So let me open the and I don't know if the head office has his own bank go forward, but it's paying for an expenses. We have not recorded credit sales though. You guys want one of the transactions. You not recorded credit.
Yes, so we have not recorded credit sales. So
Yes, we haven't.
What's the value of credit sales?
47,500.
7,500.
7,500. 7,500. So which will come here? My credit 47,000 paid. The expenses paid is now almost 17,000. 17,000 and it was paid by the head office. So the branch expenses account. We are having what we call head office cash, and that is 17,000. Next, what do I
Opening
have?
stock. Opening inventory.
Opening inventory. So you can see why we have the opening inventory 25,000. What's our opening receivable?
15,000.
15,000.
You're on your own. 12,500. Okay, sorry, you are using your manual.
Yes, sir.
Yes, now.
Okay, I think we have adjusted your manual. Pardon me. What is the amount of what we have?
15.
Okay, what's the next? What's the float?
500.
500.
500. Next, what do I have?
Oh, closing stock.
Closing stock.
Closing inventory. So let's go to the closing.
20,000.
So I will go down so that I don't have. I have a balance carry down. How much?
20,000.
13. Okay, 20,000.
20,000. So which will come here as balance brought down 20,000. Next,
Closing cash flow.
Closing
what's the closing cash
debtors.
flow?
Closing debtors.
Okay,
Closing
we have a
debtors.
closing receivable first.
Yes, sir.
What's our closing receivable?
13,750.
13,750.
750. So what's the next information?
Closing cash float.
What's our closing cash flows?
500.
500.
We also have the balance carry down 500. Next.
Allowance of selling prices.
Allowance
Thank
of
you.
selling price.
I've been waiting for you. When we get to allowance of selling price, let me explain to you. Is an authorization that is always seek for by the branch, asking the head office if he can reduce the amount in which the branch can sell the goods below the transfer price. Now, let me explain better. Allowance is that the full name is actually called authorized allowance of selling price. So if the head office are transfer goods to the branch, maybe at 10 naira, and the branch is having issue selling it, and he decides that he wants to sell at 8 naira, he must seek for the authority of the head office. Please note that this authority, allowance of selling price, can only be given when there is transfer above cost. So under the cost price method, that authority will not be given. So that's why in your question now, this allowance of selling price, you ignore. But when we get to cost plus, you will see that we are going to account for it appropriately. Because when you have that authority, it means that you can sell below the selling price. So what do we do to allowance of selling price? So we say allowance
We ignore.
We ignore.
of selling price is shaking you is ignored. Next,
No.
Discount allowed.
discount allowed. Where would that go to?
Branch receivable.
How much
Branch
is it?
receivables account.
1250.
1250.
150.
So in that case, I open my discount allowed.
Discount allowed.
Account.
You can see that it's a very simple question. The branch is very sweet. How much is it? 1250. Next,
Good. Cash received
Cash
from
received from cash
debtors.
received from debtors.
So just say cash received. How much?
45,000.
1,000.
45,000. Class, which of the information are you using? Is it the one in your pack or the one I sent you?
The one in our park.
Okay. You must not give me poison. Is there any other transaction? So the
Yes.
cash received,
Yes.
this is due from branch.
Good.
I'm coming. You said the amount is what? 45,000.
45,000.
Oh yeah, what's the next one?
Goods returned by customer to branch.
So return to branch. How much is it?
So 2,000.
So we'll go to our branch inventory. Return by customer. 2,000. Next.
Goods returned by customers to head office. Cost at
Okay, let's
300 naira.
return to head office. What? How did they quote it?
Cost at 300 naira.
Mm-hmm. And what's the amount in front of it?
500.
So it means the selling price is 500 naira.
Yes, sir.
So the head office will account for the cost returned by customer. And what's the cost price?
300 naira.
300.
Then what's the profit?
200.
So that will be
200 naira.
returned by customer to head office. So how much did you call the profit?
200.
200. Next,
200.
do we have any other transaction?
No.
So let's start wrapping up the account. So start from this first, which is goods sent. So what's the total of the goods sent? We have 100,000. So here we have 100,000. So the balance will be
The
referred to as
purchases.
purchases. So what's the balancing figure?
94,700.
94,700. So that one is one. So okay, let's look at our branch. Can you give me the total on this debit side? And I need the total of credit so I will know where my balancing figure will be. What is the value on the debit side?
Credit side is 132,500.
132,500. That is credit side. What's debit side?
Debit side 127,200.
127.
127,200.
So in this case, they are saying that the credit side is higher. And given that, it simply means that we'll be having the short for balancing figure. And what's the name of the balancing figure? We are having it here.
Gross profit.
And what's the difference?
$6,300.
Pardon?
5,300.
5,300.
Yeah.
Yes,
5,300. So I have a 5,300. Okay, let's go to the next one. Check this bill receivable form. Sorry, branch receivable. Should be self-balanced. I'm listening.
Mr. Ma.
Ma?
And the credit side is 62,500.
62 K. It can't be 62 when you have 45,000. Cash received is 45,000.
Yes, now.
How much did you call it?
62,500.
62,500. What's the amount on the debit side?
For 62,500.
So the debit is 62,500. So that means the self-balance, correct? Okay, all these now, we now move on. The amount that we have here must be taken to the head of this cash, except 500. So what's the total that I have? 45 plus 80 plus 500.
53,500.
53 K.
Eh?
80,000
And that
plus
one is
45,000 plus 500. Please don't use any
125,500.
calculator again.
125,500.
125,500. So that's
Sorry,
125,500. So the balance that will go to head office will be 125,000. Because normally all the money should have even gone to him. Are you there now? Quick one, I just saw one poison that we did and nobody showed it. The expenses should be on the credit side. Because they're expensive. So here now we now have from the branch cash. So how much is the branch bringing as cash? 125,000. So how much will be the balance carried down in the head office cash? Remove 17,000. How much will you have left? Yes?
108,000.
108,000. So transfer this to statement of P&L. That's 17,000. We transfer this to statement of P&L 1250. So class, let's get our statement of profit or loss for the branch. So the branch statement of profit or loss. What is the gross profit? What's the gross profit calculated?
5,300.
5,300.
5,000. So let's get the operating expenses. So from here we have the expenses that was incurred. That's 17,000.
17,000.
Then we have discount allowed. What is the discount allowed?
1,250.
There any other expenses?
Mm,
No. So let's
no,
wrap up. Was there any goods stolen?
no,
No.
No. Was there any car stolen?
No.
no.
So there's no. So let's wrap up. So this gives you 18,250.
Mr. Emma, this is
Class.
busy.
Gbèsè náà ló jẹ. Are you sure that profit is 5,300? Confirm for me. 80 plus 40. No, there's nothing you can do. Whatever it is, it is. And I love it that way. I hope you guys have not given me poison. Let me confirm what you have done. 5 plus 80 plus 47,500 plus 20,000. The answer is 152,000. Who now gave me 132? Poison.
Me. Poison.
152,500. 152,500. Let me confirm the credit side. Sorry, the debit side. I hope you have not given me poison on that one too.
That one is not a poison.
How do we know? That one is 127,200 minus 152,500. So what we are supposed to have was to be 25,300. So the person that gave us that figure, thank you.
Yes, sir.
That's 25,300. So what do I have here? What's my net profits? Net profit
7,050 naira.
7,050 naira.
15 naira.
Correct. I'll take your own answer because it's not coming from giver. So that's dependent branch.
Mr. Emma, please, can you go to the first page of the solution? Beginning of the solution.
This is the beginning of the solution.
Sir, next page.
It turned me to machine.
No, sorry, sir.
Oh, yeah, let's go on.
No, the next page.
Next page. Next.
Another one.
All these things also on YouTube.
And the last one.
So that is that. So can we go to the next method?
Next.
Under this method, we're looking at what we call dependent branch. Are you there now? And
yes,
good,
sir.
we are looking at what we call cost plus markup. So this is a dependent branch in which goods is sent to him at cost plus markup. Now the first lesson we are going to learn today is the relationship of what we call markup and margin. Relationship of what we call markup and margin. Now when we talk about markup, we are saying the cost of an organization plus the profits will be equals to the selling price. Are we together? And it means that At this point, the margin is always 100%. And this one can be an X percentage. So meaning that the selling price is 100 plus X percent. But when we talk about margin, and this one also have its own profit, the selling price is 100%. So we mean that if this is X percent, the cost will be 100 minus X. So what am I saying? If you are given margin and you are told that the profit loading is 20%, cost will be what? 80, and that will give you 100%. And please, why we need to know all this information is that we need to know how to apply it. For example, let's pick some example. If you are told goods sent at cost plus, we are told the value of the goods is 100,000. And we have been informed that the policy is that goods is sent at 10% margin. This is the cost plus. This cost plus is also called invoice price. It's also called selling price. And that is 100,000. I must be able to know what is the cost price and what is the what? Profit loading. Because it is sent at a margin, my profit is going to be straight 10% times 100,000. Because that's what the margin is all about, 100,000. And my answer will be what? 10,000. Why my cost is going to be 90%, and that will give me 90% times 100,000. And my answer will be what? 90,000. That is if it's set at cost plus and that margin. But if you have a policy that goods are sent at 25% margin, 25% markup, sorry. What I'm going to have is this. Since my invoice price, or what I call my selling price, is 100, and I want to know the cost, and I want to know the profit. So my people, question has to be asked. Because it's at margin, my profit will now be 25% all over 125, because I must convert my markup to margin. Remember what you did in ATS1. How to convert from markup to margin. And that is 25% all over 125. How do I convert markup to margin? That would be markup to margin. That would be markup all over 100% plus the markup. So that is 25 all over 125. 25 all over 125 can easily be interpreted to be 1.
Yeah, I just bring it out, but we are already going.
Okay.
Are you getting that now?
Yes.
So let's now look at that. So for me to now get my profit, I have to say 1 all over 25 times 100. So class, what is the answer? That is 20,000. Now, if my profit at cost plus markup is 1 all over 5, my margin, my will be 1 minus the profit. So if I say 1 minus 1 all over 5, that will give me 4 all over 5. So my cost will be 4 all over 5 times 100 over 1. And that will give me what? 80,000. What I'm trying to let you understand here is that you cannot be doing this for all the questions. But we can easily do a simple analogy. And the simple method that is always available to get this is that once I can determine the fraction of the profit using markup, I'll be able to also know the fraction of the cost. So I'll be able to apply it. Because under the cost plus method, one of the accounts will be maintained at cost, the other will be maintained at cost plus, and the other will be maintained at markup. So you must be able to share all those profits in order for you to know the right transaction. Any question for me? If there's no question, do you want us to continue or we'll continue tomorrow on Thursday? Because it's like
tomorrow.
Let's continue.
Battery.
Would you continue now? No.
My battery low, sir.
Okay, and I can see that. So I don't want to. So what I will do is that when we come in the next class, we'll continue with what we call cost plus. So I want you to please take your past question and read. You know, I told you that this question is, or this topic is a topic that has always been tested by the examiner. And if you look at their testing ability, there are things that you always get to see. So I want to just give you some things to think about. For branch, you've seen it tested in March 2010, question 6. You have it tested in March 2011, question 6. You have September 2014, question 6. You have it in March 2015, question 6. You have it in March 2017, question 1. But I've told you, please, I want you to also check this as an assignment. I want you to look at March. Sorry, not March. September 2011, question 2 and question 4. Please look at that question. And today, we've been able to look at branch. We've been able to look at branch. And for what we have done, we'll look at branch in terms of the head office. We've been able to see what are the natures of branch, types of branch, and all the rest. So I want you to try those questions. So the next class we'll be looking at cost plus. I will try to see if I can even have your class during the day. We'll have the discussion. So I want to just tell your friends, and everything that we have done is also in the Riskfree part. So you can get also on the YouTube. So please, you can tell your friends. You are going to write your exam now. You can also tell others, link others for the next day. We'll be starting the lecture by first week in December. So please bring your friends and we'll be expecting them. Any question? Any question for me, class? So if there's no question, I'd like to end today's class saying, unto God be glory, honor and adoration. Almighty God, we thank you for the little that we have done. We pray that the little will be more than enough. Inshallah.